Hi everyone, today we are going to discuss Q3 FY19 performance of HDFC Bank. HDFC Bank, the largest and the most profitable private sector bank, reported yet another quarter of strong performance with net profit increasing by 20% on a year-on-year basis, backed by robust growth in loan book. HDFC Bank's Q3 FY19 numbers were consistent as ever. Its loan book continues to grow much ahead of the system, margins were steady and asset quality continues to be stable. In the current environment where large part of the public sector bank is saddled with huge non-performing asset and remains constrained due to lack of sufficient capital, we see HDFC Bank continuing to gain market share from public sector bank on the corporate lending side while maintaining its leadership position on the retail lending. So let's look at the key highlights of HDFC Bank's Q3 FY19 performance. HDFC Bank's advances book increased to 7,80,000 crore as at end December, which is a solid growth of 24% on a year-on-year basis. Within total advances, both domestic retail as well as wholesale book continued to grow at a solid growth of around 24% each. Bank's performance is commendable as it continues to grow its loan book above the system average and despite very high base. Net interest margins were stable at 4.3% and as a result, net interest income, that is NII growth, came in at around 22%. Deposit growth stood at 22% on a year-on-year basis. The growth in time deposit was much stronger at 29%, while the growth in CASA deposit was slightly muted at 13%. As a result, CASA ratio dipped to 41% as compared to 42% in the last quarter. The improvement in operating efficiency continued as bank's cost-to-income ratio declined to 39.5% in the current quarter as compared to 41% in the same quarter last year. Bank's asset quality continues to be impeccable with gross NPA ratio at around 1.4% and net NPA ratio at around 0.4%. Banks had a floating provision of around 1451 crores and its provision coverage including floating provisions remains very comfortable at around 115%. Bank's Tier 1 capital adequacy ratio at around 15.8% was well above the regulatory requirement thanks to the recent capital raise of around 24,000 crore which will equip bank to continue to gain higher market share and accelerate earnings. So what's the outlook on the stock? We see HDFC Bank to churn profitable growth over the next few years as it continues to enjoy dual advantage or the moat on both asset as well as liability sides. The equally strong performance of its subsidiaries, that is HDB Financial Services as well as HDFC Securities, gives a lot of comfort. In terms of valuation, the stock is currently trading at 3.4 times FY20 book and is at a discount to its long-term historical average. As such, the valuation looks very compelling. It is a rarity to find a high-quality business available at a reasonable valuation. So investors should go ahead and buy the stock and the HDFC Bank should form the part of investors' core portfolio. That's it from our side. Thanks.